Welcome to Swimming with Allocators,
the VC podcast from the LP perspective,
with your hosts, Alexa Benz
and Ernest Sweat. You ready? Let's dive in.
On today's episode, we have Brian Brackeen, the managing partner at Lightship Capital's Anchor Fund. Today, he'll share with us the vision behind the Anchor Fund and why now is the right time for this strategy. And also his view on the role of diversity in venture and how it contributes to strong financial outcomes. And so with that, I want to welcome Brian.
Thanks for having me.
Thanks for being on, sir. Long time coming. First and foremost, I always like to get into how people got into this world. So before we jump into the Anchor Fund, which I'm really excited to talk about, how did you come to this world of tech and then, being an investor and now an allocator?
Yeah, some allocators go to the best schools, right? Yale and Harvard, and they work at the best firms, right? And then learn their craft over years of studied and thoughtful financial analysis. That's not me whatsoever. Kind of the opposite, where my whole life, my whole career has been studying and learning while doing. I could tell you from my childhood, which is I grew up I was born in Ohio, adopted by a family in Philly. So,
wow.
Yep, Eagles fan, go Birds! Great year this year.
Yeah. I like Jalen Hurts, but my dad's from Dallas, so we'll talk about that later.
But listen, you can't have everything. Grew up. My dad taught me how to code when I was 8 years old. Did a lot of work at East Coast companies like Comcast and IBM, and I thought that was going to be like my whole career, right? I thought, you get a gold watch, work at IBM, you work there for 30 years. That's what people do. And I got a call from Apple just after they launched the iPhone, but before they launched the iPad. So this is a period of kind of crazy growth. I took the job, after just one visit, packed all my things, moved to California, and learned a ton. Steve Jobs was still there. Tim was COO. And learned a lot about how technology in San Francisco was so different than what I had been doing at Comcast, at IBM, right, back east. And throughout my whole career, that never really sat well for me. This idea that geography had some role in the type of technology or the way you solve problems never sat well with me. And that's kind of what I built my whole career on.
Wow. There's so many threads right there that you can pull. First, kudos to you after, being, set on a certain path and taking a call out of the blue and being like, yeah, this is an opportunity, kind of risking it all, right? That's awesome. But then also you being able to have this thesis that geography shouldn't have that much of an impact on how you think and how you incorporate technology. It makes me kind of think of around that same time, it was around kind of the 2008 election and whatnot. For some reason I just graduated college, but I started to think about, why is this whole system getting in a good job and go to good schools and all this? Why does it seem like it's only made for, at the time I thought 7 or 8 cities to benefit from it, right? Mm-hmm. And me coming from Little Rock and thinking of this brain drain is going to become a bigger issue. Fast forward now, we see a lot happening, right, on that. And so I'm curious on just that background and then going into tech, how did it shape what you wanted to get out of it? And then how has it shaped you as an investor?
Yeah. Well, the biggest, shaping of both my kind of theses and even the way I deal with founders or funders now was my own entrepreneurial experience, right? So I, in San Francisco, launched a AI firm called Kairos Facial Recognition, moved it to Miami before that was cool, right? 2012. It was well before COVID.
Oh, yeah.
But saw in it all the things that we would want to see in a kind of burgeoning ecosystem, right? And just kind of fell in love with the place. So fast forward, I was able to exit that business in 2018, successfully raised $13 million, got into about $120 million valuation, but had a big fight with the board around privacy, which we see now, right? AI ethics, right, which we see now. And it kind of all white male board seeing it differently than its black founder, right? And so ultimately we sold the company to a black owned private equity firm out of Turks and Caicos, which is great. It still exists, still doing well, still processing millions and millions and millions of faces, billions actually. So the ending was good, but the investors were terrible, and I'd promised myself that I would never be that kind of investor, that I would really, really, truly be founder focused. They all say they are, but so many of them are lying. And then even now in this new work, I would only be backing fund managers that I thought lived the ethos of really caring for the mental health, well-being, and success of the company through the success of the founder.
Love that. And so, let's kind of skip forward, and you kind of were getting to it, but what truly inspired you to, start the Anchor Fund?
Yeah. So when I started my first fund, it took us, a couple years to raise the first $20 million or so, right? And the experience was, given the team's background, the expertise, the access to markets, the thesis was, in fact, no one even questioned the thesis, and no one really questioned the team, right? It was just so hard. We launched it pre-George Floyd, and it obviously was different in the post-George Floyd era. But even then, we were so focused on real results, and we found that some of those LPs, as we now know, were looking for a marketing dollar, right? You look at they've all since completely abandoned the work, right?
Yeah.
And we just found that we didn't jive very well with the marketing LP.
Yeah.
That makes sense.
No, totally. I don't know. For some reason, in my head, it just what came to my head was Easy at the White House. Like, I remember him saying it was the easiest. I don't know how much it was, but for him to get there, he's like the best marketing ever. And so, in all seriousness, I think an issue that we saw in that period of George Floyd movement was a lot of tourist LPs. And we're seeing kind of the aftermath of that, and during the kind of Me Too movement of, it being very hard for emerging managers who are women or people of color and specifically Black and brown folks, to raise.
Yeah. And geography as well. So this is a problem we have in the Midwest. People in the Midwest will hire coastal allocators who bring coastal bias to their investments and then refuse to send money back to our own region. There's a whole renaissance right now, and for those that don't know, we're based in Cincinnati. There's a whole renaissance right now in the Midwest of stop funding coastal. Let's use the word coastal elites to then crap on the very place that you live, right? And yeah, we suffered a lot in that manner. And so again, as an allocator now, we're a global fund. We invest everywhere. There's a bar. The bar is high, right? But if you're above it, you're above it. You're above the line, you're above the line. And I don't bring my Philly biases, right? And not invest in Dallas Cowboys fans.
Yeah, I don't know what has happened to me. I have so many, I must meet all the good Eagles fans because they're not the ones I see on TV. So no, I appreciate that candor. Have you, with your own experiences, have you shaped the investment strategy and kind of diligence process for Anchor Fund?
Yeah, we've for all Lightship funds, Anchor included, there's an open application process. Study after study shows that there is a human bias called network bias, right? You believe that the people that you know are the best and smartest people on the whole planet, right?
Yeah.
And the reality is that they're not. And if you only invest in your network, one, that creates these kind of inconsistencies around, equitable investment, right? Because you may have went to a great school, you may have lived in a certain area, all the cash is going to go to those places. But two, you're missing out on the highest opportunities for alpha. So anyone, anywhere can apply for investment to any Lightship fund, and people are on the other side of that form reviewing every single submission, right? That in itself, and in the world of venture, as you're well aware, is not as common with LPs as you would like. You kind of have to and again, you covered this already on some of your podcast. You have to kind of sneak up on LPs sometimes, oh, who do I know, and maybe I'll meet them at a thing, and that just can't be the strategy.
Yeah. And what approach are you all taking as far as, what percentage of the fund? Because I found this is a kind of 16-month now interview journey of meeting a lot of LPs who have been on the podcast or not, and just talking off the record. But your fund size kind of determines your strategy, and as people said, but it also determines your target audience a lot of times, right? And so how have you all approached that, knowing that there's so many different types of fund managers around the world? How are you thinking about that?
Yeah, we decided what problem we wanted to solve, and then engineered the math to make sure that it fit what we're going to do, right? And then after you have that, okay, now what LP class do I need for that fund size, right? So we're a $2 billion fund, which means we're not competing with our GPs that we want to invest in, with who they're going to, right? So
That's true.
most often we're going to governments, pension funds, large endowments, super high net worth, and that may be a little bit of competition, but generally we're talking to a completely different LP class. Mm-hmm. So that was really kind of important to us. We're writing $10 to $20 million checks. It's called the anchor fund because we want to anchor their funds, right? And for that, we try to also provide real service, right? What we're seeing is people who are really good at finance sometimes are bad at design, right? Website's terrible.
Sure. Yeah.
Sometimes they're really bad at copyright. They're really bad at whatever. So we have a whole team of folks on our side that also we can bring to bear to support the GP in a number of ways.
What you mentioned the bar is really high. Can you give some just components of your decision making process, and also kind of give the flavor of what you're looking for out there?
Yeah, I would say a couple of things. So we ain't had our first close yet, and so we're not meeting managers just yet, because one of the problems we had is people were meeting with us and didn't have any cash to deploy. Right.
That is something that people don't talk about. Yes.
Yeah, complete waste of everyone's time. So we've been hell bent on just taking our own LP lead. And we're going to close this quarter, our first close. So we're excited about that. And so now we'll start to have those kind of more robust discussions. But to give a generalized view of the question as asked, the beauty of a fund to fund is that it's so diversified across all the folks that you don't have to really drill down as hard as some of these people are drilling down on only the 5 venture investments they're going to make, right?
Yeah.
Right? I'm only going to do 5, so I gotta have 1 in San Francisco, 1 in New York. Only 1 can be in CPG. Can't have 2 in CPG. You know what I mean? They're so so clenched about it.
Yeah.
We'll make about 50 fund investments, right? Which is why we wanted to fund this size, right? Which means we can have 2 funds in Chicago, both doing manufacturing, right? And that's okay, right?
Yeah.
So you'll see more agnosticness from us, but not because people sometimes just people say agnostic because it's like easier. We're a little more agnostic because the math supports that, if that makes sense. We decided to do a Regulation C fund so that we could talk openly about the fund and not be restricted by like the Reg B regulation, so that we can all learn, from our experience. So yeah, there's just slight little tweaks that we've done to kind of help the community.
That's interesting. And I think that definitely will be helpful I'm sure as you went from like tech operator to, you founder to then like a VC, now allocator, you're seeing in the different worlds of like how there's kind of a miscommunication, or better yet, how there are misaligned incentives, right? Now we're going to take a quick break to speak with our sponsor.
Today we have industry experts Idan Netser and Jason Kropp, partners at Sidley's fast-growing emerging companies and venture capital practice. What would you say is the benefit for GPs and LPs of working with a firm like Sidley versus maybe some of these platforms or trying to figure some of this stuff out yourself?
Sure. So look, we're a very big firm. We have 2,300 lawyers, and we're spread across major jurisdictions and cities, all over the world. And inevitably, we meet with a lot of those LPs, for example, just to pick up on a simple example. And we recently had a case where a foreign LP from Australia reached out and said, "Hey, we're really interested in starting to make investments in Silicon Valley VCs. Can you help us? Can you introduce us to VCs? Oh, by the way, we're going to be visiting in about a month. Can you tee up a number of meetings for us?" So we're not bankers, but we're happy to help, because that means helping our VC clients and helping our LP clients, and of course helping the GPs along the way, along the journey. So we can be very helpful, and I think again, not just the lawyers, but all of your advisors can be and should be your ambassadors, and can be helpful in lining up whatever you need. If you need LPs, then reach out to your trusted advisor and say, "Hey, can you introduce us to LPs? Like, who do you know that could be a potential LP?" And sort of make us think through this with you, right? I think that's one tremendous benefit. Another tremendous benefit as a GP is actually, one, access to particular deals. So, hey, for example, we're looking to not necessarily lead the transaction, but we can write, $500 to $5 million checks, and we really want to participate alongside a tier 1, tier 2, tier 3 VC, whatever, someone we think is reputable. To the extent you're hearing on any room available in and around, please let us know. Well, that's a good service to you as a GP. That's a good service to our companies. That's a good service to our lead investor, right? Again, sometimes those runs are going to be completely full, and we might be able to squeeze you in. But a lot of times there's like a deal coming together, and there's still room and an opportunity if you just reach out, to the company and we do this as lawyers. We will reach out to the company and say, "Hey, we notice you have a couple $1 million available. Do you want us to reach to our network and help you fill that up?" And then we turn around and we reach to the GPs and we tell them, "Hey, will you be interested in this type of deal?" Again, confidentially first. And then, of course, all we'll do is we connect the right people and tell them, "Hey, have a conversation. It's up to you." Decisions are being made, completely independently. So that's sort of the second element where we could be the second point where we can be very helpful. Yeah. The third thing is, again, we do events. We try to bring our community and ecosystems to us in many instances. So that's true to Boston and New York and LA and of course Silicon Valley, and sometimes internationally. Join us. Come and see. Come and meet with our network and join the network. And these type of people tend to meet each other, like in our events, in others' events, all the time. And you'll start make new friends and new business acquaintances. And I think that's very, very helpful, because there is a common thread of like we're all like involved somehow with Sidley. Obviously, that's what we like everything to look like. But there's also like, "Oh, you're a client. Oh, I didn't know you're a client. That's great. Like, who do you work with, and who do you work with?" And Jason joined us recently, and we immediately started to like, "Oh, we know we have so many mutual acquaintances." So now the networks start to collide, align, and merge. And being part of that ecosystem, I think, is very, very beneficial for GPs looking for LPs, for GPs that are looking for invest in companies, and for companies that are looking for venture capital, private equity, and buyers potentially. So take advantage of those networks. They're meaningful and highly valuable.
I would absolutely trust the word of somebody who's been sitting in the board meetings, watching the sausage get made on whether a co-investment deal was worth making or not. Yeah, I also get the sense that lawyers can't fib, so they're going to tell you what's really what's really going on, where you should really be making bets. You sit at the interesting intersection where you're representing both founders and funds. I'd love to hear some of the terms or some of the places where people are getting a little more creative in how they're drawing up terms. VC investing in founder, what founders should look out for when VCs are requesting it, et cetera.
Yeah, I mean, I think, capital is definitely available. It is taking a little bit longer to get to closing from term sheet, and it is more difficult for some companies to actually get those term sheets. But when those term sheets come across, we are both creating on the investor side and also negotiating on the company side some complexity. So we're seeing a lot more tranche financing. We're seeing a lot more sort of performance-based investment. Economics, depending on the nature of the company and the industry and even geography, can sometimes differ in the preference stack. What we're seeing, though, is a lot more care around those terms, both when the investor's preparing the term sheet as well as when the company is sort of figuring out how to navigate those terms.
And similarly on the LP to GP side, are you seeing any kind of trendy requests, or are there anything that people are offering today from the GP side that you hadn't seen in the past?
So I could take this question, Alexa. So we do see GPs becoming a little bit more involved, like in the VC, in the companies that they invest in. We actually see more LPs getting more involved in the GP, which is also an interesting approach. I think people all across the industry or the ecosystem that we work in actually want to get closer to the companies and the founders and the entrepreneurs, and that's a good thing in my opinion. You have an LP that actually voices some views regarding areas of interest. AI is a very obvious one, and they're curious about it. And I think a good GP will take this opportunity to educate their LPs about the kind of companies they invest in and the trends in the ecosystem where things actually stand. That creates a very good dialogue, between, again, LPs, GPs, and the companies themselves that sometimes present to the LPs. And we see this in a quarterly, GP or LP meetings with a fund that asks the portfolio companies to present to the LPs. And that communication, it seems very, very helpful. It's especially helpful if you're thinking of a follow-on fund, an opportunity fund, an SPV to take advantage of pro rata rights, et cetera. You're reaching out to your LPs and telling them, hey, remember you met with this company, they're doing a round, and there's an opportunity to invest either directly or indirectly through a vehicle. We've seen that, being very, very helpful, and a lot of LPs have jumped on the opportunity to do so. So I think what we're seeing, again, to summarize, is LPs trying to get closer to the companies. GPs in the middle are actually facilitating great conversations. And we as lawyers trying to facilitate and make sure everybody keep their fiduciary and stay out of trouble as part of the process. If that makes sense.
Thank you for joining us on the show. If you are an LP, GP, or founder interested in seeking Sidley's expert advice, you can find each partner's contact on Sidley's website.
And now back to our LP interview.
With your perspective, how do you think LPs should approach emerging managers overall, and then the caveat of like diverse emerging managers? How should they approach it?
Well, they shouldn't. They should just come see me. Let's start with that. And let me actually explain part of that. We are really, really proud to be peer investors, right? And so you and I have met each other. Like, this is not our first day knowing each other, right? So like, it's a small group, right? The emerging manager group is small. The Latino group is small. The Black group is small, right? Like, the groups know each other. Yeah. I know this person is amazing, but they don't market themselves well enough. Or I know, because I know from my peers and because I've learned who they were before they were kind of, thought I was going to be an allocator.
Yeah.
Right? It allows me, I think, to be a little bit better at allocation. That's number one. Number two, because we have multiple funds in market, and because we do have direct funds, our sister funds are on boards and things with the other allocators, right?
Yeah.
And then we could just say to our sister funds, like, how's that person on that board? How are they doing? Do you enjoy working with that GP, right? That goes way further than what people present to you, right, as themselves.
Yeah. And since you have all that knowledge, how has it shaped kind of the traits you look for in fund managers? And I think a discussion that we've had on this podcast a number of times from some of our guests is like this diligence commitment 2.0. Essentially, like there should be other ways you look and evaluate fund managers in private markets that aren't just kind of your traditional DDQ, what's your track record, what do you have, attribution. What traits and kind of like markers do you look for today?
This is another problem I see LPs making, and again, I think they should be looking for other folks to help them. There are like 3 levels of the LP, right? Yeah. One that is like the DDQ only LP. You mentioned that, right? Where as long as you check the certain boxes, they don't even ask for the deeper insights, right? How's your family? Like, where do you
Which are real, those things influence, your decision making, right?
Exactly. So I think that LP is always going to be clinically correct, right? But doesn't really generate the amount of alpha they should, because they're missing out on the full of someone's person, right? Yeah. And then you have this next LP, which is what I would call, they love the cool kids, right? So there are certain folks among us that are prolific fundraisers, and they've got everybody on the cap, all the hard ones to get, right? Mm-hmm. It doesn't necessarily mean that they're going to be the best allocator of that capital. It does mean that they are in the right networks, pitch well, whatever. It also doesn't mean that they won't be a good allocator. But other people on the cap table alone, right? The other LPs, cap table is a crude term, but other LPs investing in that fund alone does not beget success, right? And just like we would say to a founder, right? I don't trust someone else's diligence. I got to perform my own.
Yeah.
I think that there's a category of LPs that are essentially trusting the other brands that have invested in a fund as some kind of signaling as to that fund's opportunity for success. We don't fall into that trap.
Yeah.
And then the third, I think we kind of fall in this category, is more about, it's the soft skills, it's how you treat founders, it's your standing, as assigned by the community, not you assigning back down, right? Are you shoulder to shoulder, or are you a dictator, right?
Yeah.
To us, these things are really, really important. I can teach you how to update your fund model, how to do a couple different formulas a little bit better, right?
Yeah.
But that's not what it's about. What it's about is when a founder has every option for capital, do they choose you, right? Or if a founder is absolutely brilliant and unfound, right? Unseen even, right? Can you see the invisible founder, right? Yeah. And what gives you that magic Superman, Superwoman gift, right? That, to us, that is how you pick winners.
That makes total sense. I would assume, once you all are doing kind of the fund investments and being a part of LPACs, that, what I would be looking for from Brian is, how should I think about that AI stack? What are your views on kind of the AI stack for the next generation of fund managers?
One of the things that we've been doing successfully in our kind of like test runs as we get prepared to take these first calls, and one of the things that we've been doing with our LPs and had LPs request us to teach them how to do, is create deal memos and fund memos with AI. Right? So get access to a deal room, kind of load those things and compare those up against, our own model. Like what do we need to get this model to be true, right?
Yeah.
Our own PPM, our own kind of fund docs to say, okay, we've put a lot of thought into these things about us. Here's a rubric. Here's how do we feel about this set of documents, and it's fit. Number one,
Yeah.
benchmark that against some public benchmarks yourself, right? Write the memo, distribute it to us, right? And then we come to these meetings. Ultimately, we, the humans, are the ones still doing what you and I would consider the standard process. But we're doing it. We're coming to a meeting with a full memo at every stage,
Yeah.
right?
Yeah.
So in our current non-AI world, I wouldn't say our because we're not, in everyone else's current non-AI world, you can only afford to take so many firms to memo because you only have so many analysts, so many associates, so many kind of part, right? And so much time, right?
Yeah.
But what if you could have memos at every stage of the process? You'd just be better informed, right? And ultimately, you can write a human memo at the end, but you had better data all across. And so this is an example of no one can tell me that two firms, one that has fully completed memos at every stage and one that doesn't, the one that's not doing AI is going to outperform the one. It's just, I just find that very difficult to believe.
I think also the ability to continuously learn and go back when you have more data on companies you passed on, or maybe companies you did invest in, whether you should do more follow on or not, then you can learn and get better. Because the thing I'm hearing from both allocators and placement agents is that as venture as an asset class becomes a longer and longer kind of maturity date, right? It's not the 10 years anymore. It seems more like it's closer to 15, 20. The thing that LPs would like more of is just transparency. When do you think there will be exits? When do you think, what do you think the true price of this is? Do you think we should do secondaries? All those things. I think with AI and more tools like that, you'll be able to provide that transparency, but also data-driven strategy as well.
I totally agree.
And just real quick, because I have you here, what's your view on the next 10 years with AI and how it impacts our economy?
There's a lot of people doing work in the agent space right now.
Yeah.
That's going to be transformational. I see a world where you pick the human job that has the word agent in it, and that person will be replaced by AI. So travel agent, insurance agent,
Yeah.
whatever, right? Because agent implies a repetition of task, right? That is AI's bread and butter, right? So I think that there are multi-billion dollar, multiple winners, right, in this AI space around agents. That's number one.
Yeah.
And then number two, building up on that, I think you're going to start to see, after the AI is doing the task as agents, it will start to say, how could I better do this task? So innovation of itself.
Yeah.
Right?
Yeah.
There's a great video of two AI agents talking. And of course, initially they don't know. It's like someone's phone and someone's computer. And says, hey, I'm trying to solve this thing. Yeah. I was like, hey, are you an AI agent? Like, yes, I am. And it
Wow.
goes, okay, let's use basically the old modem sounds, right? So they can more efficiently communicate, right?
Wow.
And it just changes to like the modem, right? And just it goes and does, and then the task is complete, right? And so that'll be the next kind of level of innovation in the latter part of this 10-year period.
Wow, that is amazing and creepy at the same time. um, and so, kind of going back to your thesis and why you're not being so stringent on the geos, right? I could see how AI is going to have huge impacts on different parts of the country and world. What responsibility, or not even responsibility, kind of like, what would you be looking for in the types of investments your fund managers make? Are you looking for them to kind of like make things that will equip these regions with more resilience, or being able to use the tools more? Or, this is going to happen anyway, so might as well be, some people's views have been like, we're going to have a lot of layoffs, and it's going to be the need for a benevolency, right? People being benevolent leaders. And then we'll be a utopia and be the Jetsons. What's kind of your viewpoint on how things will play out?
I'm looking forward to the Jetsons' future. That's very cool. Anyone who says they know is lying.
Yeah.
Full stop.
Yeah.
They probably have like Nostradamus in their LinkedIn profile, and all that, But I can tell you what I want, or what I think is necessary for the future. I think, one, I historically have not been a fan of universal basic income, but I came around to it after starting to do my AI work. There are a number of really important roles in society that people should be able to find their way to that might not offer a living wage in the more and more expensive world, but are still very important. Right? And so we have to decide as a society what we want to do there. I think number two, and this is already happening, but I think people think that they have an option or a choice, and that choice, and thinking that, only holds them or anchors them in a past that is quickly disappearing. And they're not preparing themselves for the future because they're complaining about their lost past. I think we've got to find a way to kind of move people forward in the process. The elevator operator doesn't exist, right? That kind of thing.
Yeah.
I would say, and then third, doubling, tripling, quadrupling down on a resurgence of making things and innovating in things like manufacturing, and doubling, tripling down in a resurgence of areas that we thought we could just leave behind, like Ohio and Illinois and Arkansas, right?
Yeah.
And if you're a person that cares about the plight of, Black people, they live in many of these places. They live across the South, up the Mississippi River. I mean, you can see where people kind of escape slavery, and that's where they live now. And so a lot of these places, if you're a right-leaning person, you should want investment in Mississippi and Alabama, because these are core red states, right?
Yeah.
If you are a left-leaning person, you're worried about the plight of minorities and Blacks, you should want investment in Mississippi and Alabama.
Yeah, because
exactly where they live. So it shouldn't even be controversial.
Exactly. Yeah, that's a great point. And I think to that, on kind of like getting people to the, to the future. And this is why I love being from where I'm from, and also being someone who travels all over the country, and seeing how we have more in common. But, there are times when I leave a Waymo in San Francisco and then come back to Arkansas or go somewhere else and see, oh, we don't know, you guys don't know what's about to hit you. And so I think this world will also call for more translators, domestic translators. And so being able to, and that doesn't mean people aren't obviously strong immigrant community all over, and we need it, but being able to translate, you working in manufacturing and the knowledge you've been able to acquire, how that's going to help and work hand in hand with the advances of technology. not to mention, if any venture capitalists are able to do that, they should win every deal that they ever try to invest in, because that is going to lead to actual dollars. Yeah.
I just want to agree with you. Full stop. This idea of transferable skills. For those of us that code know that musicians are the best coders. They have to write in code to write music. They sit at the piano hours and hours and hours at a time. No different than sitting at the keyboard hours and hours. They're creative problem solvers. Oh, that doesn't sound right. Maybe I could do this, right? It doesn't look right. Maybe I should code it this way, right? I mean, the skills are one-to-one. At Kairos, one of my lead engineers had a Grammy. He was a drummer for the Bee Gees.
Oh,
And he was a great Java developer. So I think, to your point, we've got to help people, to the musician in Little Rock, right? To say, hey, you could also be an engineer, and full stop.
yeah. Not to mention with all how that role of software engineering is vastly changing. And so the ability for a lot of people through no code and low code being able to build their own things is that's going to be an advantage for the labor market. As a kind of final point, I wanted to, we've been through, you moving to Miami in 2012 and just like me joining this industry in 2015, it feels like we've seen 4 cycles already. Yeah. Especially, as minorities. And so, one question I have is, what do you think, now especially with your seat now as an allocator, but even for fund managers listening, what can we learn from that 2020, 2022 kind of blip? And how do we make things, however you define better, right? Is that more, black and brown fund managers, whatever. But like, how do we learn from that period to make things better?
Yeah, a couple of key lessons in my mind. I'm a firm believer that DEI may have been finally killed by the current administration, but it was put on its deathbed and put in the ambulance by DEI practitioners. Not to say all of them, but I would say the majority, above 50%, were taking jobs, writing reports, couldn't move people through a supply chain, right? And weren't doing the work at a scale necessary to show the rest of the world that those efforts were worth the trouble. Add on top of that, making all of us, including people of color, sit through those ridiculous DEI trainings, right? Which are just painful and a waste of everybody, and organizations' hours and hours and hours. That just tells people, oh, is this what you do? Is it like, you know what I mean?
Yeah.
Those mistakes are, Trump didn't do that to you.
Yeah.
You did that to you, right?
Yeah.
And what I would love to see now, and this is something that we're still fighting with, and I'll give an example. There's a major allocator. We have a great firm. We want to go and tell our story. They keep routing us to the DEI team, which is a smaller bucket or whatever. Yeah. I don't even need to talk to that team. Yeah. I want to give me the main book.
Yeah, exactly.
Right?
Let's talk about that.
Let me show you my numbers, right?
Yeah.
Judge me on that, right? And so, I think that there's a lot. I don't like the fact that some people who are racist are also anti-DEI. And I'm not trying to stand next to that crew. Yeah. And I'm well aware that crew exists. But beyond that fact, that the DEI teams weren't delivering for anyone.
I feel that, that moment happened. I wouldn't say so fast, but it happened, and people were, not all, but some people, it seems like, were kind of taking the easy route. And we knew it wouldn't last forever. But if you leave crumbs of kind of like things to be questioned, things not to be the main thing, which is like, we are fund managers, but making the main thing, the financial returns, because we are fund managers. I think that kind of got lost. And so I guess I'll leave with this last kind of question. You know, when it's, I don't know, 15 years from now, and Anchor Fund is on its, I don't know, 4th edition, 5th edition, whatever. What outcomes do you want to see?
Yeah, I hope that returned a lot of capital back to our LPs. I think that's keeping the main thing the main thing,
Yeah.
right? When you make people money,
Yeah.
people hear about it.
Yes.
They want to know how you did that, right? And how they can replicate a similar thing. And then 2, in doing that first piece, I think we can show people that the Arkansas, the Alabamas, the Ohios played an outsized role in that success.
Yeah.
Those are the 2 things I think would be really, really great.
That's awesome. Well, Brian, thanks so much for, sharing your story, your opinions and your viewpoints, and, I think a vision for a brighter world and country that has the potential and all the kind of like ingredients to be united. So I want to thank you for being on the podcast.
Thank you so much.
See you later, allocator.
After Portfolio Tile, Investing with a Smile.